Good afternoon, then, everyone, as we head into US trade on Tuesday, the 26th of September. We'll flick across the headlines, see what's going on. Really, markets are still just talking about the exact same thing that we were talking about this morning. We do have a bit of US data out at 3 o'clock, which will be of note. We can see US yields at 2007 levels. I wasn't supposed to click on that. While yen, sirens blare. Obviously, risk of the Japanese intervening in the currency in order to prop up the price of it and keep dollar yen subdued. We spoke about that a lot on a number of different videos over the course of the last few weeks and months, and we do approach the levels where that becomes a reality. So something to keep an eye on. Dollar yen, but dollar continues to be relatively strong, not across every single currency, but across the majority of currency pairs, it is slightly higher. In terms of fresh headlines, not too much to go at. I mean, if we go across to the grid, we can see stocks lower as they were this morning. The FTSE has had a bit of a bounce back, but every stocks globally, whether you look across the US, Europe, or the Asia Pacific markets, all red across the board. Commodities red across the board. Oil has had a bit of a bounce back off that support level that we are looking at. The big turnaround, though, has come in yields. Yields have pushed lower, bonds have pushed higher, but equities have not been supported by that, and the US dollar hasn't done too much to push lower off the back of that. So not seeing too much move, just maybe a bit of profit taking on bonds, on some short bonds, which would make sense. The 10-year yield up to 4.5%. Buying some of that doesn't seem like the worst investment in the world. Apart from that, FX relatively mixed across the board. The Japanese yen enjoying yields being lower. Bit of a pullback in the Japanese yen, which is a push lower in dollar yen, but you can see that relayed across the charts. If you have a look across equity markets not doing too much in today's session. Pop lower just before the open. Markets open, pushed higher, and now it's making an attempt back lower. Same thing across the S&P, the Dow Jones, the Nasdaq, and the Russell. That's obviously the European open. The DAX lower at the open, back higher, and then back lower. Same thing with the Euro stocks. FTSE kind of grinding higher, which I think is interesting, but ultimately stocks remain under pressure and still are looking like they want to go and attempt to hit these lows. The US dollar not doing too much, pretty choppy across the board. No matter where you look, all of these currency pairs are relatively choppy. Apart from dollar CAD pushing higher, dollar CAD pushing higher in line with oil pushing lower. But now oil has turned around off a little bit of a support level that we were looking at on the trade floor a little bit earlier on today, rejecting off 89 off this support level, has then pushed back higher. Dips being bought in oil at the moment, absolutely no surprise whatsoever. Yields made a little bit of an attempt higher, and then gold has sold off a bit off the back of that, but gold's trend of really the last week has continued lower. Look a bit further back, I mean, the overall trend is still lower on oil. The kind of longer term trend, short term now picking up a bit of momentum to the downside, and I think this low for me personally will be something I will keep an eye on if it gets down to it. It looks prime for a test of that, but it's going to be reliant on a bit of US dollar weakness, or strength should I say, gold weakness, US dollar strength, which these figures may get in the way a little bit at 3 o'clock. Now, you got every man and his dog looking at US interest rates being higher for longer. Fed's Kashkari last night, a bit of a speech last night, which we kind of missed on earlier on this morning's session. I forgot to mention on this morning's video, should I say. He's expecting another interest rate hike, expecting interest rates to be higher for longer if the US economy continues to outperform, right? So I would say to me that an interest rate hike is not a foregone conclusion, even though that they have said that that's what they want to do. It's not a foregone conclusion, right? If economic data turns sour or turns negative, whatever way you want to put it, then you are not likely to see an interest rate hike, right? That then is a situation where there's a lot of dollar long positions that need to be unwound, right? And they will be unwound if markets don't believe that they will hike interest rates again. So I think it would be a good kind of devil's advocate kind of trade. Consumer confidence would put a spanner in the works of everybody's thesis and thought process going forward. I mean, it's not the highest impact of pieces of data, but it is still something. Everybody thinks the US dollar should be, everybody thinks that the US dollar should be long. Obviously, you can see the trend if you have a quick flick across the dollar index, look down a daily chart. It's pretty clear what the trend is on that. But maybe a bit of a weaker than anticipated consumer confidence figure might get in the way of that, and you might end up getting a bit of a push lower. So something definitely to keep an eye on. There's a few economic data points. There's durable goods orders tomorrow. There's GDP on Thursday. There's then inflation on Friday, all out of the US. Now, if a couple of them come in negative, should be some pretty good trades on dollar shorts. Plus, if they all come out positive, should be some more trades on dollar long. So US dollar will be in focus as we head on through the rest of this week. Keep an eye on that consumer confidence figures. We'll put a spanner in the works of a lot of people's plans at the moment. Isn't likely to change too much. No, could certainly provide a sharp move lower in the US dollar if it comes out negative. If it comes out positive, further reaffirms the stance, probably opens up the way for some fresh upside. Will it be as aggressive? Absolutely not, but it's something that can definitely generate some trading opportunities as we head into a US session pretty quiet of fresh fundamental drivers. Maybe that's something that can help kick markets into gear.